All right. Thank you for coming. A very good evening on the eve of Deepavali. That's right. Happy Deepavali to all our Hindu friends, and for those of you who are taking a break from tomorrow, busy night. Of course, tonight you can still trade the US market, and not to forget the Bitcoin. That's right. So happy Deepavali to all the Hindu friends in here tonight. Let's take a good break for tomorrow in here. And for those of you, some of you may already started traveling for a short holiday, interstate, whatever. Do be careful when you're driving. All in all, I hope you can also watch this on a recorded in here, and of course many more. And for our members, for those of you who are our members, Trade with VSA contest still on the screen, stocks on the dashboard. So if you can find any stocks, just take a shot of it and choose to post it on a Trade VSA Google review, and you stand a chance to win 30 ringgit voucher as well as an iPad. This contest is still ongoing to 13th of January. We do hope this is strictly for our members. That's right. Okay, tonight is the sectors and share to benefit. So I have myself and my team, we have sort of sat down and think about what were some of those shares can really help out in the coming November, December and January rally, which next Wednesday I'll do a talk on that one. So make sure you catch me for that talk here. So for tonight, definitely is the sectors that we are talking about. And don't forget to subscribe to our YouTube channel on the youtube.com/tradevsa for all the live talk that we've done, including tonight. We will be recorded up there too. All right. And don't forget to subscribe to our Smart Robie Google Play Store, from Google Play Store and Apple Play Store. And for every friends that you share with, or if they download it, you'll get extra 200 credit for all KLSE Investing Essential in one app's technical, fundamental and sentimental analysis. Of course, we also have our past winner and also our new facelift for our tradevsa.com website in here. I think some of you may have known this, but I would definitely cover them. This is how our new website will look like. Of course, I usually cover this a lot on my breakfast show in here. You could see the red pentagon, a double top, that causing the market to actually fall. But right now it does look like the KLCI are heading for south, means they are going to head down more in here. And today on our Bursa 30 heat map, you can see some of the heavy seller were Top Glove, which was down 3% in here. Hata did post well, but continued to down, affected by the sentiment of one of the news that came out on Top Glove about close to about 500 million or 800 million paper loss for doing share buyback. Now, right now, Top Glove is in heavy debt in there. All right, and then I do know a lot of people who follow certain seafood has also got into lots of trouble with the rubber glove, and I do hope that things will settle very soon for them. All right, so the rest I will talk about as they go on. The other usual charts that we have here is definitely our foreign funds flows. Do check it out, and also a sector, but I will cover this in shorter in the further down of our presentation tonight. All right, so where we were, our KLCI is still continued to be down where we are, and last Friday was the budget 2022. 2022 came out by Tengku Zafrul. He was reappointed as finance minister after the Hishamuddin, the cabinet was dissolved and Ismail Sabri was sworn in. He became the de facto finance minister for the second time within this year. So the key takeaway of the budget 2020, there is a whole stack of them. You can definitely get it all from newspaper, media, from accounting, auditor. But if you've been following budget as long as me, most of the time are little small increment that actually impact the whole thing. But in this round for 2022, due to the COVID-19, huge amount of allocation being budgeted for that, which is 322 million allocated. The highest allocation compared to previous budget, 232.5 billion for operating expenditure, 75 billion for development expenditure, and also Bantuan Keluarga worth 8.2 billion that will benefit, which is about 30%, 9.6 million recipients, because we have a lot of people that is out of job because of COVID-19. I think some businesses have to close. Even big establishment like Air Asia took a hit and also Genting have to retrench people in here. But the fact on the ground, especially those of you who living in rural area, this was true statistics that came out just last week from the EPF official, saying that only 3% of Malaysians can afford retirement. That's what I always talk about, mini retirement. You should start your mini retirement much sooner, which means you just sort of work and rest, and you should never retire. That's always been my motto in here, saying that 54% of EPF member aged at 54 would have less than 50,000 ringgit in their saving, and majority of them who withdraw when they hit 55 will use it up between 2 to 3 years. That is the sad reality of what we are seeing right now in Malaysia, EPF. That's what I've always been saying, the emphasis of investing, learning the financial literacy is very, very important, especially those of you who are slightly geared towards the financial goal. I think that's a good. I was very, very fortunate. I also started late, to be frank with you, when it comes to all the financial goal, but I was a quick learner, fast learner, take calculated risk, and I would say I'm mini retirement now. I'm really enjoying sharing with all my so-called lessons that I learn, things that I do, our trade VSA system and the analytics with all our members and the public too. And thank you for your support for all this while in our subscription India, we are able to build great apps like the Smart Robie, and also tonight showcasing you the Trade VSA 360, which is something that we find will be very revolutionized the things how you look at into the market. All right. So of course, the COVID-19 was the biggest elephant in the room, causing the Malaysian deficit to continue, which simply says that we are actually spending more than what we can afford to do. Usually we were trying to keep it below 3% of GDP during the time of Harapan government. You could see, let me just bring up the laser pointer here. Right, somewhere in 2018 was around the 3.3, 3.6. We were intended to bring it to 3, very close, and then the COVID-19 came and kaboom, we were the worst than ever, and the deficit. So even going forward with the general election 15 coming up, and you all know general election will normally use up about 150 million for the cost of any election in here, and it's going to be soon. The Sabah will have another election coming up too, and then you have the Malacca election. So all this is going to cost the government money in here. Where to get money? Except we need to finance it more by issuing debts. That's where the government bonds debts are coming in. So you can see this one is going to be like a downtrend where we see I don't foresee until 2024, but good things on our side is the CPO prices continue to be staying high, so that would somehow cover back some of our deficit. Of course, for those of you who can remember back in 1998, where the great financial crisis during Mahathir time, where we implemented the capital control, one of the things that really got us back into track was actually plantation. We were very, very heavy into plantation planting, and the export of it will manage to bring some income and wealth back into the country, and that's how we so-called export our way out. Similarly, right now I do think very same thing, the E&E, the electronics and electrical manufacturing sectors that we've seen a lot on the northern corridor as well, also on the southern corridor. Those are the one of the main sectors, plus the energy sectors, which is the Petronas, will help us in the coming supplementing the national budget in here. Okay, so on the side of the budget 2022 need to beat the 2019 actual expenditure of 317. Now remember, we talked about 332 billion amount in here that already been budgeted in here, but UOB is projecting somewhere between 338 million for the size of the budget that's likely to be used. So that is where we are looking at. So as such, all these budgets usually, they don't cause any knee-jerk kind of reaction. But the one that many of you would have known and aware of was the, I think you all no need to say, right? You all know, right? That was the one that actually broke the camel's back. which is the big drop that we had. And you can see here the market drop for almost more than 30 points, I think 30 points on Monday. But do take note, as soon as the market hit the 1600, we already had the red pentagon. And for those of you who had the smart Robie or our Pentagon guider in here, would already been warm much earlier because of the big fall. So at least you can take some precaution in here. Most of the time is people tend to ignore the indicators. Always been them, or they don't trust it enough to use it regularly, and many times also being too emotional in here. But then if you're longer term, you would already diversify out from Malaysia. All right, having said that, like me and some of the members who came to our masterclass, which I already said that you need to diversify out from Malaysia longer term. Later on I'll show you some charts that it is in many ways wealth desizing. Desizing is the right word to use. Means you put more wealth in Malaysia, it's going to compress, make it a bit smaller for yourself in. So today the market is closed 6 points. You can see from in here, that is again another sign of weakness. Okay, when you have a 2-bar reversal, market rebounded back in here, but the volumes continue to be low. So that's also saying that the trend is likely to follow downtrend in here. All right. Now, if you look in terms of the performance of the sector, year to date, FB and KLCI is minus 5.5. I possibly think that hopefully we stay in the single digit, minus 5, but it may be possible we hit about minus 9 or minus 10, depending what is in store in the coming month in here. Economists are hoping for a rebound in the economy, including myself, but we do see the big rebounds are happening right now in the US market in here. So from here, no surprises. Healthcare remain one of the biggest close down inwards in here. And then of course technology, telecommunication and transport are those tend to doing well. If you're not in these three sectors, likelihood many of your friends on colleagues may have lost jobs too, right? If they are in the other sectors too. Energy has dropped a fair bit, but it has recovered. You can see from the third quarter, year to date was 70%, but it did cover -3. It's very hard to see these numbers in here, but it's much better to see it in the charts, which I will show you later on. All right. Now, if you have any really pressing question, do pencil in there, and we will come to it and talk about it. Now, the thing that really caused our market to sort of gravitate towards the downside, right, was the cukai makmur. Now, the estimate by the one of the analysts, cukai makmur was a prosperity tax where they tax you at the highest bracket if you exceed 100 million in here. So this was the windfall tax, considered be a one-off. But then again, if you do it 3 or 4 times in every 5 years, then it's not a one-off thing. It's like when the government no money, then they start doing this. So which is pretty unfair too, if you ask my opinion too. If not, what is the way out from here? Of course, the only way out from here is to introduce back the GST, which is not very favorable, but I do think GST is favorable for some of the pockets of the nation, is because where people don't pay tax, they would have to pay the GST. Right now we have the single SST structure in here, pretty defective because there is a loss of revenue. Now do take note, the GST was taken out during the Harapan. I think with the implementation of GE15, if they do win, of course they don't dare to propose the GST lah, because if they do propose the GST, it'll be very unfavorable. Very likelihood even the current government under Ismail Sabri may likely to be not elected, because you have a 3-party which is very strong now, either the UMNO, the PN and the Harapan team in here. So all said be said, the other one I haven't been talked about is the stamp duty. Now, if you are investor and trader, the stamp duty will also take impact, and I'm going to show you example in here how much that going to impact you to in terms of stamp duty. Because in the past, if you notice on the top here, stamp duty was around 0.1%. All right, now take note, even for trading, our commission, if you're trading online, is 0.1. Okay, so 0.1 now they increase it to 0.15. Okay, 15. There was a cap, but now you don't have a cap. Now the only difference is that there is a minimum charge, okay, for the brokerage, which is either 8 ringgit or 12 ringgit, but for this one there's no minimum charge in here. So if you use up 5,000 ringgit, then it's just a 0.1. But however, the amount will increase, or the cost of commission will increase as you subsequently go higher. So at one point you want to consider, why are you paying so much commission when you can go over to US and pay 0 commission? And this is also one of the challenges that a lot of people who decided to sort of hold diversify out, and also for the weaker currency. In the longer run, it's better diversify out some of your investment to the markets that I always talk about. And definitely we have been supporting you through Smart Robie, using the US market as well as the SGX and the KLSE. All in all, the KLSE remain to be a home place where we sort of think upon the idea, but to really make the big wealth, you might want to consider somewhere else. Okay, so on this side, because of the windfall tax, roughly about 120 over companies was impacted in here. Now just above me in here is our KLCI, right? If you look from the KLCI, some of the big sectors were 6 of the banks are actually is the component of the KLCI. You got 4 healthcare, but that has shrunk to 2 because this was as of 30th of April. You got a few energies, industrial goods. But do take note, what was really doing well was technology, right? So technology did not make into the FBM 30, although this week they will talk about Inari being the first technology company that will be added in, replacing maybe one of the other 2 company right at the bottom of the FBM 30 will be taken out. Now do take note, if you compare this to the US of the NASDAQ, so that's why you see NASDAQ continue to go high, because it is technology focused. We all know technology sectors for the last 3 years or 2 years since COVID-19 has been really going up north, really parabolic, just like what you have seen Tesla stock did in the last 2 weeks in here. So the traditionally index, even you look at US and Malaysia, has been very focused on financial sector. So if you look right here, Malaya Banking, Public Bank, Hong Leong Financial Bank, RHB Bank, or the Bank one, they are one of the heaviest in terms of pre-tax income. Now take note, anything more than 100 million, you will kena the additional 9%. So that is why the bank stock is one of those you should avoid going forward with this effectively one of in 2020. So right now the market seems to be pricing in already. And also the 2 biggest dragging for the KLCI seems to be healthcare stocks and also financial stocks in here, right? Now on the stock broking trading costs, because of the stamp duty that had been added to 0.1, it start to affect, okay, investor if your trade size per trade size is about 125,000, okay, 125,000 per trade size, it does impact. But if you're long-term investing and you buy 1 shares and you hold it for longer than 12 months, it won't be so much of the impact, because if you got into a good technology stocks, probably it will cover the additional cost of it. So trade size will start from 125,000 because of the removal of the 200 ringgit cap that you see in here. Previously we have the 200 ringgit cap, so even if you buy up to 1 million, you will pay maximum of 200 ringgit for the stamp duty. But right now they remove the cap. It's something that the government use from time to time to sort of try to scrape the bottom of the barrel to get additional revenue, which they are doing right now. And now in this example, I've done something for our members and also the public here, is the stamp duty. Okay, now for the trade size, using 140,000 per trade size, because this is where you have the stamp duty 200 ringgit. So the brokerage is at 0.1 with a minimum of 8 ringgit. So if you have total purchase value of 140,000, which means you're buying a stock of 5 ringgit and you're buying 28,000 units, then you have a service tax will be a 6% service tax inside here. So that one will be slightly different calculation in here. So what all in all is that you will pay a commission of 382 ringgit. 382 ringgit. That is representing 0.27, okay, 0.27 of the 140,000, all right, 0.2. So 300 ringgit is a fair bit amount. Consider it, where you're coming from, the zero commission. Now, for those of you who are investing in US, will be very understanding the zero commission in here. Now, if you just move to a smaller amount, let's say usually you and me are doing a 10,000 ringgit in here, then we are talking about an increase in 50% of the stamp duty, right? Which means your cost will actually increase by 20%. In this example in here, you can see we have a total value of 10,000 ringgit. So your commission when you calculate that is 23 ringgit, okay, which is 0.3 cent to 2 cents. Now, if you add in the 0.15 starting January 2022, that will give you pay another additional 5 ringgit, okay? I know additional 5 ringgit is not a lot, but if you're doing 3 or 4 trades a month, and that will add up to a couple of 100 ringgit. It's good. When the times are good, you're making money. That's considered the cost of transaction. But if you are not making money and if you don't have the right strategy, it seems to be missing out a lot of the good trades, then you will feel the pinch of this 5 additional ringgit in here. All in all, it is 0.1% going to 0.15%. It is a 50% increase in stamp duty. Many people may not catch it in here, but at least now you know what you know. Enjoy, but we all know the reason for the SST is to increase car usage, or more like automotive consumption or selling of that. So we want to have the economy moving. But the big thing which really caught my surprise is the EV. Okay, now electric vehicle, does that apply to hybrid? I don't think so. Hybrid is still considered as a petrol powered car in here. Now the challenges in EV, many of you would have known. I would have gotten the EV car with or without the tax-free much earlier. But the challenges has always been the infrastructure of the EV. Right now there's quite unclear goals about the implementation. It's a lot of incentive from the government, but the national automotive policies, like it or not, has always been biased towards the petrol powered car, because we have remember Petronas, as much as early this year, not Petronas, sorry, Proton, or under the arms of Geely, has pretty much firm up they are not producing any EV car for the Proton. No doubt even Geely, which is the parents of Proton, do produce a very good EV car competing over in China, but the question is still remain. At one point in time they would come over here, but even if China, Geely would come over here, first thing you have to think about who is going to add in the charging station, which usually connect to the grid. So which means right now you only get it at petrol station. And then the other one is previously EV cars in Malaysia are overly priced. If you're looking at Tesla in Malaysia for brand new car, you're looking almost at 650,000 range. That is like the Mercedes and the Ferrari, not Ferrari lah, the Mercedes and the BMW 8 series kind of price level in here. The 5 series are cheaper, about 400 to half a million amount, depending whether you're 5 series S or not. But right now with the tax-free budget in here, that price will definitely drop a fair bit in terms of what you have seen right now in here. So that's something very good. So it is definitely a plus for the automotive industry here. Okay, then the other sectors that we usually talk about is the economy reopening that we have seen over the last few weeks here. What we call the shopping mall REITs of the commercial REITs like KLSE Property Pavilion and IGB are expecting revenue growth. I was at the Mid Valley last week and the traffic is getting not too bad. Of course, in the additional of travel and leisure, MHB Airport, which estimated revenue growth in 2022, and AirAsia. So those are areas we can actually look at. Later on when we do the stock analysis FA, we can check it out definitely from there. So these are the other economic reopening time to time again. So my point on the stocks which is neutral are banking stocks, which I've talked about. Energy stocks, like it or not, right now is due to the quota that is imposed by OPEC. So that's why we're seeing energy prices going up and more reopening of the economy and traveling. Especially now, you've seen a lot more travel in here. But also one of the reasons we are seeing is because globally everybody is cutting down on the energy crisis, energy due to the what we call blackout that we've seen in China. So energy has sparked out as reacting to this blackout that you see in here. On the side of the property, which is neutral, we've seen a lot of surplus of property in the market in here. No doubt property sector the last 2 weeks has run up. This is also due to the reopening, but I do think those are temporarily because affordable housing is still way out from many people in here. So I'm neutral on these sectors in here. So tip 2, so if you look from the sector screener in here, and this is from our trade VSA 360 that you see on the right hand side. I will show you next after this is the demo of that. You can see right now this a bit smaller in here, and you can see all the sectors each and every one of them are running on red pentagon, with the exception of construction and technology, right? And the percentages of the index that is moving higher and up, it's about 5% for technology. So right now we are seeing technology starting to kick up right now, also in line with what we are seeing in US too, the November and the December rally here. So take note of that one. I will come back to this later here. Okay, so going forward, sectors to look for the remaining month of November, December and February are these 3 sectors. Of course, number 1 is technology, which is the electrical and electronics manufacturing that we've seen so far. The next slide will cover some of the stocks I have, and also plantation and also automotive. All right. Now, first in all is the electrical and electronics industry. Definitely number 1 in there is Inari, followed by KGB, which is also benefiting from all the 5G and IoT. Penta, UWC, Great Tech, and MI Tech. Now, MI Tech is on the semiconductors. We're going to come back to look at this shortly when we do the stock analysis part in here. All right. So take note of this one. And when it comes to plantation, right, we have Ta'an, Bolstead Plantation, Sarawak Oil, and SOP Sarawak Oil Plantation in here. These are the sectors you can look at it. Of course, do time it together with the green pentagon in here. But going forward, with the higher CPO prices in here, plantations will do well. On the automotive in Malaysia, you're only left with 1. Even I do think that Bernas doesn't have any EV, especially Mazda. Mazda is not in the EV sector in here. So Tanjong do have the Leaf 2, but Tanjong is still in the red for the year of 2021. So that is definitely a question mark. How much? As I said before, the take-up rate of the EV car in Malaysia is yet to be seen. It's just that it's nice that the government is doing this tax-free, but really, out from the 1,000 people out there, how many people will buy a full EV car? A hybrid is no longer not an issue, but EV is a pure EV car will be definitely a no-no. So okay, right. So right now we're gonna go on to the trade VSA. Now take note, the trade VSA 360. This is no charge to our existing member. It's more of an upgrade, a facelift in here. It's going to be happening on the 6th of November, this coming Saturday at 11 a.m. So we'll be doing a live FB for the official launch of this one talk in here. So I do hope you can join me. But the remaining of the time I'm going to just cover for tonight is the sector review. The sector Pentagon guided entry and exit. Then we'll be looking at the sector screener, because we want to talk about which are the sector we are going, the electrical, all right, the technology, all right, the certain level of the industrial products in here, and also the new one that many of you are not seeing is the stock analysis, fundamental analysis code. So join me on this Saturday at 11 a.m. coming out from live Facebook, the same place where you're watching this, martintf.wong. And also towards, if we have time, we'll do some stock review. So right now I'm going to show you how the thing look like. Okay, and Okay, so this is the trade VSA. So as soon as you log in, this will be your 360 in here. So once you log in, you can see the 360 stock in here. Of course, this is your first dashboard that you have. You have the 4 markets here. These are delay prices, you can see. So right now the Dow Jones, yes, it's already up, it's down 98 points. The market is down 6.3 points in here. So this is still the end of day chart. You can see very similar what you have, so you don't need to. If you are longer term investing, this is definitely suitable. The trade VSA 360 is really target more for the analysis part. Of course, there is a part I will cover more is the intraday alerts and the COC screener. This is something very new, working together with Zach as the input out from it, and this is where you can have a list of stocks that actually move up where we have pullback and COC. I will do this another time where you can actually trade for those who's trading real time for that one in here, because most of this signal are activated right early in the morning, just in the morning about 9 o'clock in here. Powers, I don't know how well Powers has end. We are so on the 6th of November and going forward when I'm doing my Friday Trade VSA, our Friday breakfast show, which is a new segment replacing the Smart Robie one. I'll be focusing a lot on the intraday stock alert. So this is the one that we have. Of course, there are others which I'll cover on the Wednesday, this coming Saturday in here on this dashboard. So clicking back here, and so one of the things that we want to look at is the overall sector. And of course, you can see the KLCI for the 3 months here. You can notice we are seeing a lot of what we call outflow. So the outflow is also showing when the market showing a lot of foreign funds buying in here, which is the inflow here. Now you're seeing negative, it's outflow. This is a KLCI, so you can see this market really coming down in here. So the one that we're going to be talking about is the KLSE sector, 3rd of November here. And to open it up, just click on this one and it just opens up very nicely in here, and you can actually sort it out by Pentagon. So one of the things that we are really looking for is the when are likely the next sector has turned. All right, this is something good that you want to keep an eye. If you notice, technology has been green Pentagon for 29 days. KL Energy just turned red Pentagon for 1 day. So you can just open it up here. You can definitely see the 6 months and the 3 months. Okay. Is let's go back to 3 months. You can see just turned red Pentagon for the energy sectors. So technology has turned green Pentagon for 29 days, right? So you can see, so if you would have got in, the date appeared was the 4th of October. Okay, 4th of October, which is 1 month ago lah. So if you have gone in and we do know technology sectors, then you're able to write some of these. All right, from the percentage is about 5% already in here. So early on we talked about technology, right? The other one is plantation. Now plantation just turned red Pentagon 5 days ago. You can see this was the, and that coincide with the sell-off that we're experiencing right now. So you can see now we have a spring here, and if the plantation can hold on is the level, definitely we will see plantation turning back green Pentagon here. All right, so the other one that is green Pentagon is construction, right? Construction actually fell below this level here, 100. It hasn't turned red Pentagon in yet, and hopefully it can hold up. If not, eventually it will also turn red Pentagon. So much for that. That will actually telling you right now the good sectors, if you don't have much choice, would definitely be in technology. Okay, so technology continue to have that nice uptrend. And remember, what are those 4 or 5 stock that I've showcased to you just now? Okay, you still remember or not? Okay, if not, let me just show you again the technology sector, going back to here. All right, it's this one here, and all right, so this one, Inari, KGB, Penta, UWC, and Great Tech. Okay, so the next thing we want to do is to screen for our sector. So we can press back here, takes us back to the 360, and we will go on to the screener. All right, so the screener in here, we will look at the sector index, which is the one, and sector percentage gain. All right, so sector percentage gain, what it does is actually look for shares in the same sector that has a pullback. All right, so we know that the technology sectors are doing very, very strong. So what we want to do is to look for the one that has a pullback. Okay, now taking a bit longer here. All right, there you go. So first thing, we just switch. We can always open this up. right? And so we just wait for it for a minute here. Or not, we just go on to this one. So what we does, we look for technology stocks. All right, we screen from here. Okay, yeah, it's up here. So we look for technology stocks. So we'll submit this one here. And there is a growth sector in here. You can click on those. That is really the growth sectors. So all in all, what we are looking for here is to look for stocks. We submit first. All right, you can hear in my background that is the Deepavali that is ongoing. They're playing the fireworks, okay? Okay. So now we come over here. Yeah, it's a bit... All right, so you can see from technology in here, we can click on the growth. So these are a lot of the growth stocks. What we try to do is try to avoid those red one and looking for those double green. You can see green. JHM looks pretty decent, okay? JHM looks pretty good. So this is one that you want to look at, JHM. Okay, and we have JF Tech. Those are green one, but we want to look at those stocks early on, which we talk about, which is Inari. Okay, so from here onwards, if I didn't come up with the list, you can always come here and take a look at these stocks. Okay, you can take a look at these stocks here. So let's take a look at the example that we have just now, and we will be looking at, okay, first one, Inari. Okay, so if you don't have those stocks, you screen through here and you want to look for those stocks which is not in your list yet. All right, for now I've screened it for you in here, so we just look for Inari. Okay, so you click on Inari in here and you'll jump straight to Inari. This is the FA analysis stock quote. So all in all, it's giving a rating of 2. You can just mouse it over here, tells you a combination. And what does Inari do? And here is a short description saying that it provides semiconductor packaging like back-end wafer processing or not. If you want to go to the website, just click on this one here. Apparently the website is not protected. All right, for some reason why they didn't do this a good job. So we come back here again. So the charts are still showing this here. You can see still continue to be uptrend, hasn't turned green pentagon yet. And what's very interesting about here is the analyst. So you can move on to your mouse analyst. You can see there was a buy call by Macquarie Group on the 28th October, giving it a 4 ringgit 35 cents. Still have a TP. Target profit upside 11.3% in here. In the shorter term, we use the Smart Robie. Here you can see a TP of 427, very close to the 4.35 TP2, and the stop loss is 366, which is somewhere around here, 366 in. All right, so you can have all this target price and profit target for the shorter terms, but it is not, as I said before, offer undervalue. It is actually a growth stock. So you can see here the safety buffer margin, what we call margin of safety, is definitely negative territory. We want it to be green. Okay, there are some stocks I will cover on another time, but tell you these are what we call safety stocks. Okay, of course here is all the growth stock, Sharia, mainboard, technology, and large cap. So they basically tell you, and they're color coded one, making it much easier for you to read. And for you, okay, so one of the things that you want to look for when you want to buy this stock is this part here. You can always enlarge this. So first thing is that, has Inari Pentagon turned green? All right, it's always best to enter the next bar after green Pentagon and exit the next bar after red Pentagon. So we look at the Pentagon guider. So for that reason, we can see, going back here, you can see from this, he hasn't turned green Pentagon yet. Okay. So what kind of market stages is Inari trending now? Can I use a good pattern setup? Use daily chart and weekly chart. So if you want to switch to a weekly chart, this is what we recommend here. Switching to a trading view, go to Inari. Right, and if you switch to a weekly chart, the trend is still up. Okay, so the trend is still up. So that's telling you the weekly trend for identification, and seasonality chart, very important to know when is the month. So best time to trade is using trade VSA pattern for mid stage 2, avoid when the market is trending down stage 4. You can always go to the glossary here there's one part under learning. There is a VSA glossary. You can click on that one. That will tell you all the terminology that we have, right? If not, we're just going to go back here again. So you can click and find out without. So the other one that I find it very useful is the seasonality. A quick glance on the seasonality that basically tell you the amount percentage of return. Now, if you notice in NARI, right, total return the last 6 years is from 2016 to 2021 is giving you an average return of 24%. For the month of November, it's about 5%. Last year they have two very down years, 7% and 6%. So December were about 3%. So let's hope the technology continue to run. Then you will see likelihood the December month is still there. It is above the yearly return of 24%. So it is already at 38% in here. So no surprises if the market were to pull back. But if you don't see any pulling back, as I said before, Inari being accepted as part of the so-called FBM 30, then you feel you will be fine. Now, one of the reasons why it has done pretty well was because of, if you look back on the 18th of October and 18th October, you can see here, which is, this is 18th October where the price listed here. That's the one that actually, okay, let me just open it up. You can see better, right? So you see on the 18th October, that was the news. The market broke up, and on the news of the joint venture with the OSAT together, that's why Inari broke higher. Okay, and I do see potential going forward. There is a bit more upside from here. Now, on the stock trend, for those of you who like to do a bit more on trend comparison, you can do this over here. Now, the orange one is Inari in terms of PE. You can see PE, the higher, the further away from the center, the better. As I said before, all things being said, if you look at the versus sector average, Inari is actually not one of the best. It's not the cheapest. Average for the sector technology is somewhere at this level in here. It's below par. So what it simply says is you want to have a company stocks where it have a wider radar. Okay, this is the principle of radar, meaning the wider the better. Okay, so here is, we are looking for very wide ROE, means the higher the ROE. So you can see here in Inari. Of course, you want to see the others, you can just click on Elsoft, and then Elsoft will come out, and then you can do another comparison in here. You can see Elsoft charts in here, and turn it off again, and you can click on front can. Right, so this is how fast you can actually look at the certain sector, which one that you want to buy, especially if you're really short of cash and you only want to buy one or two stocks. You can actually look at it, and you can see from here, this one, front can stock analysis by JF Tech, a buy call that was on 30th of July. So a lot of the buy call is already been priced into here, so you can actually see this market up there. Okay, so right now Inari seems to be good, right? And I like it. I just wait for the green pentagon in here, and then I can do my so on the stock part, there are other things where the value plus the growth, these are coming soon, so you can do another comparison and study about these stocks. So definitely you can see from the analyst side, there is a buy call from Macquarie Group on the 28th with the upside of $11.70. So that tells you that these stocks on the backdrop what I'm getting has more room to move higher. Okay, so that's just one. And the next one we want to look at is Penta. Okay, we want to look at Penta. So you can just type in Penta, and of course Penta already hit the M West 22nd of June, has a call at 5 ringgit. Right now is 5.62. You can see the charts in here are updated too. These are delayed, so you can see how chart, it's up 1.2%. Floating shares are also important, right? Good liquidity. Red means it's easily manipulated. Orange means it's a warning. So when you have high liquidity, generally the stocks can hold much better. Of course, you have positive cash flows here, and then the profit target in here, it's about 582. Okay, very close to the old high. You can see here 1, 2, 3. So market is targeting over there, and you can also compare the range. Okay, let's take a look at the seasonal. If you notice, last year in 2020, it actually moved substantial, almost a 60%, 99%, and a 7%. So right now it's only 17%. Yearly average is 71. So it does look like Penta has some room to move up. And if the earnings are considerable, let's take a look at this. If you can see here, Penta third quarter, which is came out on 29th of October, came out on a stronger quarter, which is this chart here. You can see 29, and that's why we have the breakout in here. So it does look like Pentagon guider for this will be going up a lot more here. That's a very good. Of course, you can also always switch to the real-time charts that we have here. So all in all, the 360 is used in conjunction with the 360. All right. So here is the 360 in here. Of course, we also have the PS calculator, and we will talk about that one. The watch list still remains. This is something I will cover on Wednesday, but the screener is a big one. But I want to show you one of the things that we really done in terms of news by Pentagon flow. I'll talk more about this on Wednesday, is to look for those stocks which is news Pentagon and zooming in, scanning the news, where has a very good Pentagon flow, about 60 to 70%. Remember, we talk about 60 to 70%. That's the level you want to be going in, and some of these are actually looking at this level, which no one is looking at. And you can click on here. Let's say you're looking at Mitra. Hit on Mitra, then it comes to this chart. You can look at the chart showing you hasn't break out yet. You know, those are the chart, and you can do a bit of analysis on Mitra. And also here too, you can check out Mitra. Last year had a 15% gain here and 0.13. But more important is to understand what sector. This sector is construction. Now remember, construction, I said before just now, one very neutral lah. All right, neutral. Okay, so neutral, and you can see here also there was a sell call by Kenangan on the 1st of June. Okay, so this one you don't need to buy lah. So from then onwards, you can eliminate a lot of garbage stock. Okay, a lot of garbage stock, and by looking at the news headline in here, and also you can check out the stock Trade VSA stock comparison between GBD and Pintaras. It does look like Pintaras is a better one. So click on Pintaras, so then you can analyze from there. So from here onwards, you can always sort of float you and look for the best of the best share. You can see Pintaras is definitely giving you 6 out of 8. Okay, 6 out of 8, and you can see there's a trophy here. So that's how you can find very good shares going forward in here, right? So for the remaining time, what I'm going to do is to sum up here. And okay, any stocks that you want me to look at, just let me know, but I'll just do a summary from here onwards. So these are the shares that you want to be looking at going towards the remaining of the year. Once on this Saturday, for those of you who already subscribed and already signed up for our wealth building. For our wealth building roadshow, which is on the 15th and 16th, you can start using this. This is part and parcel of the tools that you'll be trained to build the wealth. And I do hope that I want to bring you to creating bigger wealth in the year 2022. There's a lot of opportunity out there. Okay. So in short, okay, join me again on the 11th of the 6th of November, this coming Saturday, 11 a.m. on the Martin T.F. Wong here. We definitely talk more on this one. I'll show you a few more screeners. So for the summary for the remaining seasonality for the month of November and December, okay, since we're in November, you notice, right? For the month of October, that was the 1%. We are already down minus 0.18%. Now, this is also available on Trade VSA, Trade VSA 360. And actually, I got it. You go to dashboard. Okay, and you just go down to here. All right, this is where the seasonality here. This is the chart. You hit that one. Okay, hit that one. Okay, okay, this is where it comes out, and this is where I actually plug. This is updated every night. All right. So when you get that every night, then you will get that in here. Of course, then you have the regional prices for tonight. If I want to see where is US doing right now, I'll just need to open this up. You can see Hang Seng is down. Tonight, I think Dow Jones is down 95 points. Okay, so I can actually see from the top here anyway. No issues. Just stick it back right to the top here. You can see down 95 points in here. Okay, the rest I will talk about it more on this coming Saturday, so join me. So all in all, if you look at the December month historically, since 2016 until now, has been very, very positive. So we would have average about a 4% run. Let's hope we have that run, and then this 5% will be a better one. But many times, right, we might just don't get the market, or who knows, this month will be another 4% or 3% down for the month of November, then December it will come back, and hopefully we won't end up with a minus 6% return or whatsoever. That's something that I really don't like, to be on the seasonally return for the month of November. So you've seen that they are pretty consistent. You can see September month always lose money one. Okay, September month always lose money in here. October, November also all lose money. So only December is the comeback month. Okay. So the facelift, I've talked about this and shared with you in here before. And of course, we are still promoting our wealth building portfolio in here. The early bird has closed, so we are back to 1388 for our wealth building roadmap for the 2-day seminar on Zoom 15 or 16. We start at 8 p.m. in there, and you will get the 3-month Trade VSA plugin plus the 362. All right, the 360 is something that we use, and going forward next year, the plan is to have the 360 also for the US market, and then from the Hong Kong and also SGX market at no additional cost. Okay, that's for the time what we have planned in here. So definitely continue to subscribe to our packages in here, and do join us in our private training too, where we teach you how to use those 360 in here. Then you will have a better insight how the market works, and no longer buying doom stocks. Okay, so the Trade VSA 360 dashboard allows you to have a bird eye view of the foreign funds, the Bursa sectors, the KLSE screener, what are the sectors that is coming out in here. We also have the industrial screener to buy before next. Tonight I'm just sort of giving you a shortcut. We're just looking at Inari, which is a sector in here, but usually you can actually go in and scan for those that people has not moved up. And using the Pentagon guided entry, that's the one what we call news by Pentagon flow, allows you to find stocks that has not been bullish, so it means still moving accumulation before the pickup. Right, you want to buy things before it break out. Anybody can buy breakout. Any system can show you breakout, but we want to teach you to buy before the breakout, where your risk reward are much higher. And that's how really generally a lot of how smart money buys in here. And to exit, I think that's fairly easy. Just look for the red Pentagon that we have in here. So with that, the 360, we feel that is the best tools around in town, with all the proprietary information in here. Try this out. Definitely 15 and 16 in here. And we also have the other watches which I didn't talk about in here. Amno, RHB, Jewel, Crown, and the Coal Eye, focusing on fundamental. And our Trade VSA, our tools, has trusted by 400 reviewer in here, using the power of volume spread analysis. And we are at the last segment. And don't forget to review us on Google Play Store in here. And of course, some of you want me to look at the stock. So right now, I will end our session for tonight. As I said before, do go over to a Google Play Store and give us a review. So what for the remaining of time, I'm just going to go through some of the stocks that you want me to look at. Okay. Now for our masterclass member, 15 and 16 of November is free for you, right? There's always a benefit for being a member, okay? The 15 and 16 is free, but if the public want to join, they will have to pay a small fee, but they get 3-month subscription. We encourage them to actually subscribe to our 360 in here, because we have took really a lot of time and development, especially my time and my team, to develop the 360. And again, it's mainly working with our Trade VSA coaches and trainer to come up with those tools that they use regularly to invest and look into the market. And also for the 15 and 16, just a sneak preview, we will be also touching on cryptocurrency. For those of you interested in cryptocurrency, we have an easier way to create and build wealth using cryptocurrency. Of course, if you are existing member, you'll be getting the cryptocurrency indicator absolutely free of charge, no cost at all. So why? Because that's where the wealth is going to be building. All right. I think importantly, you all must know this new tools. You don't want to be left out at the end of it when everybody making money on Bitcoin, on Ethereum, or Litecoin, right? And then you'll be wondering why I'm still buying and holding off to my rubber glove. That's the message. Okay, we need to be smart. All right, people. Okay, let's go to where we have looking at this market here. So firstly, we'll give preference to our so-called free, members in here. All right, our our masterclass members. We want to look at VIS. So when you have this, just type VIS here. So you can see VIS is 2 out of 8, and it broke through up here. You can see. So generally right now the market is just holding its base here, right? And if you look from here, the seasonality, it's already there, 98%. You can see VIS. Okay, so VIS is already somewhere this level in here. Okay, okay, so you can see VIS. So it looks like it's not going to go anywhere. If you look back at the last 6 months, it just gaps up in here on some good news. All right, positive cash flows. If you have bought it, great. I think it's rated 2 out of 8, dividend yield, ROE of 22. There were no coverage from the thing. So what do? They do design, assembly, and semiconductor. So it's another semiconductor industry here. So I would think there was probably some news early on. Okay, let's see if there's any news here. Mainly it's all on ending up Vis Dynamics auditor quit. That was some time back. No, I don't think we have any more of the news. These are some of the news that are not relevant in here. So you can see Choi. Okay, let's look at the comparison. So if you look from here, VIS is not too bad. It is considering quite strong in ROE, dividend yield, EPS. In terms of PE, of course, being closer to here would be better. Right, it's not too bad if you think of it compared to Avantech, so it's quite strong in terms of its fundamental. So I suppose if it's the wider of this radar chart that you see here, then it's actually good to keep up. Okay, next one we have is Tiguan. I think Tongguan is one of the stocks early on I pick up. You can see here buy call by Rakuten 28th of October. First thing comes to mind, I'll just look for the buy call first. It's about 40% upside, and the target price is 394. Right now it's only 281. Floating shares are quite decent. You have good liquidity in here, and if you looked at TP2 is about 3 ringgit in here, and the chart just turned green pentagon, so that's a good one in here, but it has a pullback. So let's look at the seasonality. So seasonality is 12%. Yearly average return is about 13%. Okay, so let's hope we have a bit more room to go. But take note, December, the many months seems to be very negative for Tiguan. And if you look at Tiguan, surprisingly, you will see sometime the January and February is the season that it runs. Interesting. So sometimes we actually look at the seasonality return to determine when is a better time to really want to be in. Okay, so you can see Tiguan it inches up after East Spring bought 5% on the 17th of August. All right. It's a packaging and company. So let's take a look at this one is paper and packaging, beverage, tea and coffee and machinery. It's 2 out of 8. It's not one of the best. Of course, all things being equal, you want to have 3 and higher here. Okay. It actually looks quite good on your phone too. It's designed for phone. All right, and so I suppose that's about it. We have it for tonight, and definitely on the 6th of November, especially our members, when you join in on the 11 a.m. We will turn it on the 6th of November in the morning. So by the time when you come in and join us on this coming Saturday 11 a.m., you would have a chance to play around with it. Okay. So with that, I thank you for your time, and I see you on Friday morning, okay? Friday for our breakfast show. Thank you for coming in here. And remember what we talked about earlier on, the 3 sectors, the 3 strong sectors are technology, EE, plantation. Oh, we haven't even checked out the plantation stocks. So SOP, you can just type in here SOP. Too many SOP. Okay. There you go. SOP, hit that one. And SOP, another 6 out of 8. You can see that. That's a good investing. And you can see from here, wow, siapa bagi BAMB 10th of September. Give a buy call at 4 ringgit 50 cent. Okay, interesting enough. Okay, you can see this one came down, so it looks like it's building up a base. Technically, some of these stocks are okay. If you look from a 6-month chart here, you can see it hitting some resistance over there. All right, so check it out on the Saturday. I'll see you then. Okay, bye bye.